Welcome back. It's been a weak quarter for Equitas Small Finance Bank. Slippages and write-offs are high for the company, and the loan growth rate has declined compared to previous quarters. Mr. N Vasudevan, Managing Director and CEO at Equitas Small Finance Bank, joins us now. Mr. Vasudevan, good morning. Thank you very much. I know it is a difficult quarter, the one that we are going through, but even in the previous quarter, the slippages have been high at 517 crore. What was it the quarter ago? And in any case, at 11.5, that's a fairly high number, isn't it?
Yeah, hi, morning. Actually, the last quarter was, in a way, it's a pretty good quarter, I would say, because the collections did come back quite strongly. And if you remember, I had mentioned the last time also in December, our X-bucket collection efficiency, which is people who don't have an overdue, how many of them are paying their EMI for the next month, that had reached 99% level in December itself, and that continues to be slightly over 99% in the quarter ending March also. So which shows that people who have been paying and don't have an overdue, they are continuing to be able to pay, and there is hardly any additional stress getting created out of that bucket. The slippages are basically people who have been in the 1 to 90 bucket who are slipping into the NPA bucket by end of the March quarter, and that is why we took a prudent call to write off a significant part of that amount, because largely most of that comes from microfinance. So we took a call to write off and clean up the balance sheet. Of course, it's a technical write off, and so the collection efforts will still continue at the field level, but we still thought that we'll clean up the balance sheet by taking a write off, a one-time write off, and clean up that effect. If you see, microfinance contributes 20% or 19% of our book, and that is where we have seen the maximum stress. The remaining book is all secured loan, and we have actually not seen much of stress in that side of the book. And microfinance, you know that it does have this yo-yo kind of scenario. Whenever there's an external event, the microfinance book does go in for a heavy level of stress, and that's something that we have to manage as we go by.
Okay, Mr. Vasudevan, because of those higher write-offs, your gross NPA levels actually came down quarter on quarter. You were at about 3.7% at the end of Q4. Now, can you give us some more granularity on the asset quality projections? How much of the total book, MFI and the rest of the book as well, how much of the total book would be, say, under your quote-unquote watch list or potentially stressed? Also, you've not increased provisions this quarter. They're actually lower Q on Q and over last year. So what's the thought process with respect to provisioning?
Our GNPA in March was 3.6%. It was 4.17% in December on a pro forma basis. So that's actually come down. That coming down, of course, was aided by this write-off. And our steady state NPA, if you've seen the last few years, our steady state NPA has always been around 2.7 to 2.8%. That's been our steady state NPA. And we have actually increased the provisions through the year. We changed our provision norms in the month of December by increasing the level of provision at each bucket of NPA beyond what the regulatory requirements are. And that's why if you see, we had a 45% provision coverage ratio in the beginning of last year, and we ended the year with a 58% provision coverage ratio. So actually our provision coverage went up during the year because we took a lot of provisions in the earlier part of the year. And going forward, today if you see, as I said, we don't see much of a stress coming from the rest of the book. It's basically a microfinance, and even that was coming back to a good level of normalcy in the month of March. But now, what's happening in today is something which is again opening up a lot of doubts in everybody's mind. So we really don't know exactly how the picture will emerge for the next 2 to 3 months. But going by the past trends and going by the resilience of our borrower segment that they have exhibited last year, if the kind of stress situation even relaxes sometime by, say, second quarter, I think our customers should be pretty strongly back.
Do you have the wherewithal for another 200 crore write-off? Because this quarter looks much worse than previous quarters.
We'll have to see. As I said, we'll have to just take it as it comes. Basically, we in microfinance, we carry a 80 against that 8% overall provision coverage ratio. We actually carry 85% provision coverage ratio for the microfinance stress book alone separately. So we have actually provided a lot of amount for the microfinance book. So to that extent, we are reasonably protected. But we'll have to see. As I said, we really have to see the first quarter and then see whether we need more provisions by end of the first quarter.
The exact amount you have set aside as for stress on the MFI sector? After all, MFI is only 18-19% you said. So what is the stressed book and how much write-off? I mean, how much provision?
So that's what I was saying, that in the small business loan and commercial vehicles, we don't see much of a stress building up at this point in time. It's only the MFI, and there we have a 85% provision coverage.
Okay. Mr. Vasudevan, what percentage of your book was moratorium last time around in the first wave? I'm not saying from the point of view of the number of borrowers, but just generally as a percentage of the book. So that'll give us some sense on how much stress to perhaps expect in terms of the overall numbers.
Yeah, actually, that's a very interesting question, Surabhi, that you're asking, because that's something that I think people don't really appreciate or don't even understand. The segment that we are lending to, the informal economy, the small business people, their honesty and intentions are at a much better level than most of the rest of us. And second thing is their ability to come back to normalcy is also much better than most of us. So last year, the first moratorium, March, April, May, we had 98% of customers by numbers and 90% by value going into moratorium. And from there, we reached by December, we reached a 99% X-bucket collection efficiency. So that's kind of been the, the level of resilience and comeback that our borrowing segment have actually shown. And this is something I don't think most people appreciate or even understand.
What is the ECLGS part that you lent?
We have not been active in that scheme.
I mean, you took no help at all?
No.
Why would that be? You have small businesses, isn't it? Would it not have helped?
Yeah, but no, we really didn't go through that scheme. On the other hand, we did use a restructuring scheme offered by RBI. About 2.5% of our total book was restructured.
Okay. What's the capital? Will you have to raise any? Or planning to raise any?
We are actually at a healthy capital adequacy of 24%. So for at least a year or so, I don't think we'll require capital. We'll have to start growing again at 25-30%. We'll have to start growing again. Maybe then after a year or two, maybe we'll need more capital. But otherwise, we are very strongly capitalized today.
Okay. Your deposit growth is a very healthy clip. What is the sustainable number? This 3% quarter on quarter is a sustainable number?
Yes, see, deposit, we had a 50% growth over last year,
Yes.
but with that, our CASA actually more than doubled. And our CASA ratio started the year at 20% and ended it at 34%. Yeah, it's a very strong growth in our CASA ratio. And our retail deposit also started at 50% and ended at 72% overall deposit was retail. So there's been a lot of momentum on our deposit base last year. This was largely aided by a few products and initiatives that was launched by the bank, but very significantly supported by our digital initiatives and the digital outreach that we have done. And if you see the number of accounts that we opened, new accounts we opened, the previous year was 1.6 lakh accounts for the entire previous year. And the last year we opened 4.8 lakh accounts. So it's almost 3 times of 300% jump in the number of accounts we opened last year with half the staff staying at home. So I think this digital initiative is what has really been driving our deposit growth. And to that extent, I hope that we can continue to sustain that momentum.
All right. We'll leave it at that, Mr. Vasudevan. Pleasure speaking with you. Thank you very much and all the very best.
Thank you. Thank you so much.
Okay, so the markets did pick up from the morning lows, the first 5-minute lows, but the 10 o'clock highs that we saw have also gotten sold into. We're somewhere in the middle, so I guess